We've been hearing that there's some concern, and trading has been impacted this week by concern on the threat of global inflation feeding into the local market through imports like crude oil. What's your sentiment around that and the kind of impact it could have on the NSE's upward momentum?
Well, thank you very much, Alishia. It's always a pleasure. Well, that's a good observation there about the global scenario in terms of the fuel prices. And definitely, just as you noted there, inflation tends to affect purchase power of most of our investors. And because of that, it definitely might slow down the kind of momentum that we are seeing. As you noted earlier, basically, we are still looking at the NSE 20 still tending to rise. But as of now, the psychological barrier of 4,700 still looks a bit of a challenge. But looking at some of the fundamentals that are still coming out, the news reports about the economic growth and all, they are still positive, looking at it in terms of the internal situation. And so hopefully we'll still be able to cushion that in terms of what is happening globally. Of
course, as you've highlighted, this news comes amidst a very promising growth picture. Do you see the inflationary risk possibly seeing the Central Bank of Kenya pushing rates higher to curb inflation, where we know that lower rates have been a pretty strong focus for the central bank over the recent past?
Well, that would definitely pit the central bank against a very, very sensitive area, because just as you noted there, we've been seeing the central bank try to see how it can be able to create liquidity in the market through lower interest rates as well as such. But definitely inflationary risk is one of the factors that really affects, especially for most of our foreign investors who want to look at how they can be able to get into the market. And just as you noted there, they have been fairly active in terms of the equity market. And because of that definitely puts the central bank in a very sensitive position. And hopefully we're going to see them being a bit proactive in terms of seeing how we can be able to still cushion the economy so that we can be able to keep on the momentum that is already beginning to build up.
When it comes to the banks specifically, we know they've been pretty resistant to lowering rates along with the central bank's benchmark. Do you see them potentially hiking things fast if rate increases are implemented?
Well, looking at it in terms of the banking front, yes, that's definitely one of the factors that we've been trying to look at in terms of how the banks are reacting to central bank activity in terms of lowering the interest rates. Well, for banks right now, because of what we are seeing, a lot of activity in terms of the expansion, a lot of activity in terms of how they are lending, and their major concern about the default risk as well as the cost of credit. One of the things that might make them want to consider raising would be such factors that are coming in terms of how they are being able to lend out. And because of that definitely positions them in a position to be able to still try to see how they can be able to cover themselves and push some of those costs to the people who borrow from the bank.
Well, in terms of their performance on the market itself, very interesting times. They're still contributing to bulk of the day's volume traded on a continual basis. Let's look at a couple of the players there, KCB in particular, because it's always been undervalued, and that was a situation that was probably exacerbated by its rights issue. What are you making of that counter right now?
Well, Kenya Commercial Bank, just as you noted, there has been one of the stocks which has been undervalued for quite a while. Well, looking at it from the point of view of the recent rights issue, well, the uptake, first of all, was relatively not as good because it was not even fully subscribed. We had 70% uptake, and that already was showing investor sentiment in terms of anticipation of the share price dipping because of dilution. But looking at it in terms of the value of the stock, especially where it has been positioned now with the increased capital base and also the expansion strategy that they have had, they seem to be very well positioned for growth as well as for being able to sustain in terms of the share price. And looking at it in terms of the overall picture of the market, I think as at now, especially on some of the banking stocks, most of the investors are looking for value, and some of the things that they're trying to look at is the PE as well as the forward PE to be able to see where the value is. And Kenya Commercial Bank is turning out to be one of the stocks which they're trying to get into, and as at now it seems like it's reversing, and the share price is going towards where it had been earlier on in the year.
Well, the fact that it's been undervalued providing nice impetus there. Equity Bank, on the other hand, has increased, what, 70% year to date. Yes. What are your view on those valuations, and just how much higher can prices climb in that regard without dimming investor interest in your books?
Thank you very much. We're looking at the PE of some of those counters. For instance, people like Equity Bank, whose PE is fairly above 20. Looking at Housing Finance, whose PE is fairly above 20. Well, some of those counters, we seem to see a lot of investor sentiments, which are very strong and positive. As you might note, you see that some of these counters have been very much in the media in terms of corporate actions. Equity Bank has already started talking about going into Tanzania, going into Rwanda. And when some of these things are getting into investors' minds, we are seeing them being able to take advantage of that in terms of trying to take positions before. And looking at equity, well, there's been talk about it closing the year by the shillings, around 30 shillings, and because of that, we're seeing a lot of demand on some of these fronts.